Well, howdy there, folks. Welcome into today's video. We have a lot to get into in this one here today. My goodness, it is a very busy video. Obviously, we're going to speak about Apple's earnings, Palantir's earnings, what's going on with PayPal stock, many others. I put $20,000 into a stock today that's going to surprise a lot of people. We're going to speak about that, why I went ahead and did that. So action-packed video. I just want to get straight into it. I appreciate y'all joining me as always. What is going on? I don't know what's going on with Loom AI, but fireworks, okay, well, I guess we're going to have fireworks in the background, but appreciate y'all joining me as always. Thanks so much for being here. And by the way, when's the last time I recorded you guys an outdoor video for the main channel? It was so long ago, I don't even remember. An outdoor video for the main channel, this never happens. So it's rare. It's about 70 degrees outside, and I said, I'm recording outside tonight, okay? I deserve it after today's good day. It was a great day in the public count here today, up over $49,000. So definitely spectacular, and it was extra spectacular because our biggest position in the public count was down today. Meta decided to sit out the rally, but hey, I'll give Meta a day off because that stock has been a beast this entire year, so I'll give it a day off, but it was weird. Tesla, we are up over $20,000 here today in the public count. Amazon, $1,100. Palantir, obviously massive move, 20%. We'll talk about Palantir and some shocking things that happened there. That one was about $17,000 up today. Elf on a Shelf, about $3,500 up. Should have been up way more than that. PayPal was up about $5,800 here today. Skyworks up about $1,600, but we'll probably lose that $1,600 tomorrow on Skyworks. Fubo was up $5,200 here today. So the biggest positions really in the public count were really rolling here today, okay? Alrighty, so I'm going to start out off the top, talk about Palantir, okay? Obviously, it's a significant position in the public count, 5,555 shares, been doing very well with it, and we'll speak about if I'm planning to add more Palantir shares in just a moment here, okay? So, first off, the income statement was absolutely, positively an unbelievable A+. I couldn't believe it. I was like, what? I mean, it was as perfect as perfect gets. Revenue grew to $558 million versus $477 in the same quarter last year. Cost of revenue hardly went up for the company. Hardly. I mean, it went up, a few $100,000? It was nothing. Gross profit, $450 million versus $370 the same quarter last year. So basically, gross profit was up around $80 million or so. That's incredible on a year-over-year basis. Sales and marketing was actually down for the company year over year, 176 versus 182 in the same quarter last year. Research and development was up about roughly $5 million or so. You got, as a tech company, always got to spend on R&D. You always got to stay ahead of the curve, right? Especially if you're a Palantir. General and administrative was actually down about $20 million roughly. I was like, okay, let's go, baby. So total operating expenses actually dropped for the company about $22 million year over year. Now, if your operating expenses are going to drop like that and your gross profit went up $80 million, then you got some fun numbers coming for you, okay? So overall, the income before taxes was $79 million for the company, right? I mean, yeah, income from operations, 39 mil, interest income, 36 mil. Yeah, 79 mil there. Net income was $73 million. Now that compares to the same quarter last year was $123 million loss, which shows how fast Palantir's really turned the ship around in regards to this, right? I mean, you're talking about roughly a $200 million differential between what this quarter was versus what they were at this quarter last year. That's incredible. Karp and the team deserve claps. 2023 to me has really represented the year of getting the ship back pointing in the right direction. And I think 2024 and beyond for Palantir is really around growth, okay? Now, to take this a step further, Palantir is now entering the game of beats and raises, okay? So basically what they did is they beat on their numbers. They beat on their bottom line, non-GAAP EPS 7 cents. That beat by a penny, which is actually a pretty substantial beat on a percentage basis, by the way. Revenue beat as well. They beat by about $2 million in terms of revenues. They also raised guidance in kind of what they're expecting versus what analysts are expecting, right? So the game of beats and raises has now started for Palantir. Now, I told you guys in the video I produced for you, a night ago or 2 nights ago, that I was 0% scared going into PayPal and Palantir's earnings. And one of the big theses on why I was not scared at all is because I understand the numbers very well for these types of companies, right? And so for Palantir, I told you, analysts are too low on all their estimates. Palantir is going to come in with beats and beats and beats. And that's what we're just starting to see play out now at this point in time. And analysts are still too low. let me be quite clear about that. They're still too low in what they're expecting for this year and next year when it comes to EPS. The forward Ps look like they're really high, but the truth is, those forward Ps you're seeing are likely not accurate. They're likely far lower in reality, likely far, far lower, because the company's starting to come in and beat EPS, and I think they're going to, if anything, it's going to accelerate in terms of their earnings per share. And we'll get into why that's going to happen in here in just a moment. Analysts are also too low on their revenue estimates as well for this company, in my personal opinion. And so what we're going to see play out now is Palantir come in, continue to beat revenues and earnings per share. And then everybody realizes, oh, Palantir is actually a cheaper stock than maybe we thought it was, 6 months ago, 12 months ago, something like that. No, this was absolutely huge on the conference call. Karp, he basically says, I'm sure Ryan will talk about this, the scale function of this. It's like one of the logical question is if you are doing really well, why are you so happy that you have $40 million in operating income? Well, it's because the unit economics are so good moving from boot camp, from pilots. It took about 6 months to boot camps, taking about 2 days, right? So their old way of doing business was they had to basically consult with a customer and get a customer onboarded, but it was like a 6-month process. Now they can basically accomplish what they used to be able to accomplish and get the customer excited, but in a matter of 2 days, right? Alex Karp talks about one of the boot camps he took, it was 6 hours. So the company's going to be so much more efficient moving forward, right? Which means the sales cycle for Palantir, which has been one of the only bad things you could ever say about Palantir is, wow, it's a long sales cycle, has almost overnight been completely transformed for this company, right? Which means we have a fundamental change going on in Palantir's business model. You always, in the stock market, a very important tip I'm going to give you, okay? If you want to find special stocks and special opportunities, you need to find companies that have a fundamental change in their business model for the better, right? Because there can be two types of fundamental changes. One is for the worse in the business model. One is for the better. Palantir has a fundamental change in the business model for the better. The fact that they're going to go from a sales cycle that used to take 6 to 12 months, if not longer than that, to maybe a sales cycle that takes days or weeks is a fundamental change. Never mind that, if you spend 6 or 12 months with a customer before, right, and they still weren't convinced, then you lose that opportunity. But now if you can convince a customer like that, you can win that contract much faster, which is why I think we're going to see a nice, really, regardless of what happens in the economy, really, I think we're going to see a very nice reacceleration of growth for Palantir in 2024. And I'm talking about quite considerable. This is no small change, folks. This is a fundamental, huge change. And it's important that everybody as a Palantir shareholder understands how big of a change this is that's actually going on in this business model right now. I don't think there could be anything bigger for Palantir than this change we're looking at right here when it comes to these boot camps. I mean, absolutely tremendous, right? Now, let's speak about the stock. And if I want to add more of the stock now that I know this, okay? So first thing is, Palantir is already an important position for me. It is in my portfolios, right? In the Patreon portfolio, for instance, it's the second biggest position I have in that portfolio, the second biggest, okay? And so that's already a big weighted stock if it's the second biggest position for me overall, which I feel comfortable with given the income statement and balance sheet. By the way, if you want to see the moves I'm making in that portfolio each and every week, the stocks I'm buying and selling, check out the pinned comment down there. I'll have that as one of the 2 pinned comments down there. And you can join there and basically see the moves, plus be part of that Discord chat over there and see the moves I'm making week in and week out with that portfolio overall, right? I also have, and I'm not a big player in the options market, I can tell you that. It's very few and far between. But I do also own some Palantir call options. These are $17 strikes. They expire January of 2025. So far, we're up 71% on these. And if Palantir stock obviously does a lot better over this next year or so, it will print a whole lot more money than what it's printing now, right? And obviously, I have the 5,555 shares of Palantir overall. So I feel pretty comfortable. I wouldn't mind owning a little more Palantir, but I feel pretty comfortable, given the call option position, given what I have in the public count, given that's the second biggest position in the Patreon portfolio. I feel pretty comfortable with what I have in Palantir. I wouldn't mind owning more, though. I wouldn't. I mean, given what I think is going to happen with this company's numbers over this next few years, given that balance sheet and given what management has really proved out, right? And so my overall happiness with Palantir over the past 3 quarters specifically is I'm pretty darn happy, to be honest. And just as these quarters ticked along, I'm just happier and happier, I guess I can say, with kind of what Palantir's doing, what they're putting up for numbers. And I think they're going to win back a lot of shareholders that maybe they lost in the past. And I think they're going to start winning over a lot of Wall Street over this next 12 months. If they keep executing and they step it up into the next level, which I think they're going to do, I think they're going to win over a lot of Wall Street. And I think this will become a very large market cap very quickly. So very happy with that. Obviously, S&P 500 inclusion likely coming at some point, probably in 2024. It's just going to be a hard prediction to make if it's coming, first quarter, second quarter, third quarter, fourth quarter. That's a losing proposition to try to anticipate what quarter it's going to come, but it's likely coming. And it's still no guarantee, but it's likely coming. Okay. Alrighty, next up here, Apple. Okay, then we'll get to PayPal, what's going on with PayPal. We'll get to the stock I just bought $20,000 with and all that. But Apple, I'm seeing some baloney out there, okay? Top news, Apple now has $162 billion of cash on hand. And I'm like, it's baloney. It's not accurate. It's literally not factually accurate. And you could fact check this easily. Apple has cash and cash equivalents of $29 billion, 29.9, right? So just under $30 billion of cash and cash equivalents Apple has. That's what the headline should be. Now, if you want to add up their marketable securities and their long-term marketable securities that are things that are dated over 1 year into the future, then you can get to that number that you want to get to 160. But that's just not, to say they got $160 billion of cash, it's not accurate, actually. Okay? So that was something that was very important. Also, what is accurate is they have long-term debt of $95 billion in their balance sheet now at this point in time, right? Which is over 3x what they actually have in cash and cash equivalents. And another thing when it comes to Apple is they have one of the most shocking numbers in regards to Apple, $62 billion in shareholder equity. That's horrible. Horrible. We're talking about a company that has what is Apple's market cap here? $2.78 trillion market cap. $2.78 trillion market cap, and all the company has in shareholder equity is $62 billion. That's like nothing, literally like nothing. So it's amazing because I've watched Apple's balance sheet, folks, and this is very important, okay? I've been tracking Apple since I got in the market. I have watched over the past 5 to 8 years, Apple's balance sheet, despite them bringing in so much profits, deteriorate rapidly to the point where they only have $62 billion in shareholder equity on a nearly $3 trillion market cap. Why has this happened? You got to ask yourself. Why has this transpired when the company's brought in so much in profits over the past 7 years or whatever? Why has their balance sheet been deteriorating? The reason being is they're spending so much of their money, almost all their money pretty much they're bringing in, and sometimes they're even taking out debt, to essentially do dividends and share repurchases. Which you might say, well, Apple's bringing in so much money, you might not care about that today. What if Apple ever runs into hard times in the future? What if those iPhones aren't quite selling the same down the road someday, right? What if those iPhones are disrupted someday? What if, this and that happens? Like those are things to consider. And so Apple's just, instead of piling cash and really building out their balance sheet, they're actually destroying their balance sheet. And so I just think that's some food for thought there, folks. That's I used to look at Apple's balance sheet and think, and this was even 5, 7, 8 years ago, and I used to think, man, this is one of the best balance sheets out there. Not anymore. Not with that big debt load. And with that little shareholder equity, folks, it's not what it once was. And so, especially when you consider how large the market capitalization's gotten now at this point in time, it's pretty darn shocking. I mean, really darn shocking. Now, the stock's moving down after hours, down about 3% or so, roughly. And there's really 2 components of this. This is a smaller reason, but they're actually a business in decline. Now, this is several quarters in a row. Their business is literally declining at Apple, which is pretty shocking to see. Their product revenue went from about $71 billion roughly in this quarter last year to $67 billion in this most recent quarter. The other thing that's interesting is this quarter ended September 24th versus this quarter ended September 30th, which is even more troubling because that means this quarter actually didn't get an extra week of iPhone sales where this quarter did, right? So that's something to take into account. So that's important, man. That's important. I mean, their product revenue, and remember, this is like iPhones and Macs and Apple Watch and all those things, dropped almost $4 billion with one less week, like one extra week. That's surprising. Okay, now services is a bright spot. Services is saving the business model right now. Okay, and so net sales were only down, we can call it $600-700 million or so for the company, but it's really because services came to save the day. Okay. Now, in terms of cost of sales, they're kind of keeping things roughly in line there. Gross margin was up for the company on a year-over-year basis. R&D, they are spending, more on R&D, which they kind of have to do, right? I was really shocked to see this number. Selling, general, and administrative, they actually were down almost $300 million year over year. That was pretty surprising. Operating income for the company came in nearly $27 billion roughly, and EPS came in very healthy. So that's why I gave them a C+, because their bottom line numbers are very healthy. But it's obviously not good to see how bad of a spot the hardware business is right now. And, I don't feel like these headlines are doing enough justice. I don't think we should be talking about, Apple has $162 billion, which they don't in cash. I think we should be talking about Apple's business is deteriorating rapidly in the hardware space. Like, these are not small numbers, folks. Nearly $4 billion year over year. And you got this extra week. Like, that's crazy. That's crazy. I think that's important. Now, the real reason the stock started to go down after hours is the bad news we got on the conference call. And Luca, the CFO of Apple, basically said that they're expected to do roughly inline numbers with last year. Now, that's a huge problem. The reason is analysts had the company growing revenue about 4.5% roughly for this next quarter. So the fact that they're talking about they're only going to do a number roughly in line with last year is not good, folks. It's not good at all. I can tell you that. Not good at all. Now, I actually texted a friend this. I said, the stock's holding together well despite the weak guide. I think everyone just cares about the services number now. That baby will just keep growing and likely keep growing for many years to go in the future, which is, what I believe will play out. Like, services shouldn't stop growing. Like, if that ever stopped growing, then it's a whole different ballgame for Apple, right? I said products revenue will eventually likely come back. Apple either has to launch a banger product, like a banger iPhone eventually, or the consumer's got to get in a better spot. One of those, eventually one of those two scenarios will likely play out, and so that's good for Apple. But, the business is in decline, and it's now several quarters, and it's actually seemed like it's gotten worse recently, which is a little worrisome, okay? Now, Square reported after the bell, and that stock is skyrocketing. I've seen it up as much as 18%, but we can call it 15 to 18%. And you might think I would root against Square, being that I've been buying so much PayPal stock recently, and I might be like, I want to see them do bad. Nope. I want to see these guys win. I want to see Square do well. I want to see all of these stocks in the fintech space do well. Because my thought process is, right, the fintech space ultimately bottoms this quarter we're in, right, which it's looking more and more likely that we did bottom very recently in regards to these stocks, especially seeing some of this price action. And these stocks all start to come back to life in 2024 in a major way, right? And so a rising tide lifts all boats. I need to have, if fintechs really start going to go on a nice run in 24 and then into future years, we can't have all these stocks doing bad, right? A rising tide lifts all boats. PayPal, one of the huge reasons that stock's been pulled down over the past couple of years is because everything in fintech's been pulled down. And if everything in fintech's pulled down and everybody's sellers and no one wants to buy these stocks, the stock prices go lower and lower and lower. And so if we're going to talk about share price appreciation over the next several years, we've got to be in a situation where these companies are doing well and then they're all pulling each other up. And instead of Square going down 15% on earnings and pulling the whole space down, Square goes up 15% and pulls the whole space up, right? And gets a lot more excitement in the fintech space in general. Now, in regards to PayPal stock, here, let me be very clear what I'm expecting from PayPal stock over the next several years. Because I thought, let me just be clear about this and get this out there in terms of my expectations, okay? I am not expecting this, what you're seeing in front of you right now. This is what I would call basically a V-type recovery, like just straight up in a straight line, straight to the moon, something like that over the next year or so. I'm not expecting that, folks. That is not my expectation. This right here is what I'm actually expecting, okay? Now, keep in mind, PayPal went up in a straight line, right, and then down in a straight line. It all happened in less than a 2-year span. Absolutely incredible, right? This is what I'm actually expecting to happen here in PayPal stock. Not a V-shaped recovery. It's going to be a sweet recovery over the next 3 years, but it's not a V-shaped recovery, okay? We're going to have some moments where the stock skyrockets and then it plateaus and then it goes down for a bit and then it skyrockets, then it plateaus and goes down a bit. And that's what I see playing out for PayPal stock over the next 3 years. It's going to be a fun next 3 years, in my opinion. And I do believe we're going back to $200 plus a share, but it's not going to happen overnight. It's going to happen over the next several years, and it will be gradual, nice moves up, then a move down, then a sideways move for a bit, then a nice move, and that's what I'm expecting, a very healthy move. Meta, on the other hand, right? Meta, we're up $342,000 on Meta stock now at this point in time. Meta was a V-shaped recovery, and it was a perfect V-shaped recovery, right? All in a matter of 2 years, Meta went from $300 to $88 back to $300 in 2 years, right? It's not what I'm expecting with PayPal. I'm expecting it to be, we can call it, I don't know, what type of recovery do we want to call it? But not a V, okay? And if it is a V, it's a long, big, huge V versus a straight down, straight up type V like we had with Meta, okay? So that's my expectations with PayPal stock overall, all right? Next up here, Fubo. Their earnings are coming out in the morning. Now, the stock has done pretty good this year. It's up about 63%. It's all pennies in the end. It's all pennies, literally. Actually, it is pennies in the end. Even the 63% move, it is literally pennies. But pun intended or no pun intended, this is, little child's play stuff that's going on right now, okay? Here's the bottom line. I believe analysts are far too low in their expectations for what they think the company's going to earn ultimately next quarter. I think they're going to have a much more profitable quarter than what analysts are expecting because 3 months of the new subscribers are all going to hit, plus the price increase that they put in, last quarter, right? That's all hitting. Plus you have the best quarter for advertising revenue as well, right? And so tie all that together, I think analysts are and Fubo's also watching expenses like a hawk. I think ultimately analysts are pretty far off in terms of their EPS projection there. I think the company's going to be have far less of a loss than what analysts are anticipating there, okay? I also believe analysts are way off on their revenue expectations for the next several quarters. Analysts think the company's only going to grow revenues 18% in the December quarter. I think there's going to be a rude awakening that's going to happen tomorrow. I think they're going to grow far faster than 18%. I'd be extremely disappointed if Fubo only grows 18% in the December quarter. I'm expecting a 20-25% type number. It could even be bigger than that, but that's what I'm expecting. Same thing with next quarter, same thing with the following quarter. I think analysts are far too low on these numbers, folks. Far too low. I'm like, you guys are just off, in my opinion, in regards to all these numbers, okay? No, somebody asked me, what if people sell at $3 tomorrow? Like, let's say the stock, good earnings, good subscriber numbers, great guidance, optimistic conference call and all those sorts of things, right? What if people sell at $3? I don't care. So they can sell, that's a stupid move. Like, if the company announces what I think they're going to announce tomorrow, which is profitability is getting in a better place faster than people anticipate, revenues are going up substantially, they're attracting way more subscribers, which is a recurring revenue stream for the company. Somebody sells at $3, that's laughable. The Fed's likely done at this point in time, so that's going to take a lot of weight off of these companies, right? Rather than the weight that's been on them for the last year and a half, which was just interest rates going up. Not very realistic now at this point in time, right? And so if anything, I look out there and I say that weight is off the company now at this point in time. Now it's just down to executing numbers. And I think they're going to come through with the numbers. I really do. It's one of the few small cap companies that I think actually has it like that. A lot of these companies have been nothing but serial disappointments. I think Fubo has it like that, folks. And I think they're going to come through with the numbers. The losses are going to continue to come down for this company over the next several quarters. And I think there's going to start to be even talk about, could we have a profitable quarter in 2024 at some point in time? And once they get to profitability, it's game over, because then the money is going to start pouring in for the company. All they got to do is get to that first step of profitability, and then it's going to start pouring in, because then they're at total leverage. And I'm looking at all the financials in the business model. Everything's going in the right direction that I need to see it to go, to see them get to that profitability and then to up to the next level. So, yeah, if somebody's to sell out at $3 tomorrow, that's just stupid. Like, that's the best way I say it. It would have been like, Palantir was $5, $6 last year. It would have been like somebody, selling Palantir after it went to $7, $8. Like, dumb. Like, you're just making a dumb financial choice. Like, people can do whatever they want. It means nothing to me. All I know is, like, I'm not in a Fubo stock to get a little money off this baby. Okay, I'm in Fubo because I believe this is going to be a $10, $20, $30 stock in the future, not because I believe it's going to be $3. Like, get $2, $3, $4, $5, put me to sleep. It doesn't matter in the end in regards to this one, right? Now, somebody said, what if it goes to 4+? I said, okay, if it goes to 4+ tomorrow, I'll do a live stream on Twitch. So we'll see what happens with that. By the way, thank you everybody that's been joining me over on the live streams. It was a crazy week of live streams. I do those Monday through Thursday. I don't usually do a Friday one. But hey, I'll make an exception if the stock's over 4 tomorrow. If the stock's over 4, I'll do a live stream, okay? Now, next up here, Elf Beauty reported another A+ quarter. The quarter was shocking. Okay, $215 million in net sales versus $122 million. Cost of sales only went up to $63 million versus $42 million. So gross profit went to $152 million. Selling general and administrative expenses, considering how much revenue growth, they actually kept that pretty in check. Operating income went to $40 million. Net income went to $33 million. And their EPS almost tripled year over year, right? Absolutely shockingly great numbers. I listened to a conference call. I walked away as optimistic as ever in this company. They beat every single quarter. Like, they beat, I think, 11 straight quarters. If I recall, I think it's 11 straight quarters they beat on revenue and EPS. Shocking. It's nearly 3 years of straight beats. Think about that for a moment. Like, how do they do it? How do they freaking do it? Okay. And so I looked at those numbers, right? And I'm also thinking analysts are way off on their numbers. They're too low. They're too low on all their earnings per share numbers. They're too low on their revenue numbers. Elf beats quarter in and quarter out, and analysts are too low. And so if you look at the forward Ps, they're not accurate. They're not going to be accurate. Supposedly we're trading, based upon this fiscal year's numbers, 35 times. That's not going to be accurate. It's way lower than that. Supposedly for next year's numbers, we're trading at 30 times. That's not accurate. We're going to be way more profitable than analysts have us here, okay? So none of those numbers are accurate. And even if, let's say hypothetically, this is the way I was thinking about this. What if we were trading at actually a 30 times next year's numbers, okay? The way I thought about this is, for a company that's been growing revenues 60, 70, 80%, and for a company that's, nearly tripling up their earnings per share on a year-over-year basis, the bottom line is, folks, Elf is a steal freaking deal. A steal deal, okay? Is the biggest chopper in the world coming or what? What is this thing? What is this chopper? What is this thing? Holy smokes. Now that's a chopper. Whoa. Now that's not one of those little choppers. That's a big boy chopper right there. Holy smokers, that's no dang jokers, okay? Now, obviously I have my 1,000 shares of Elf on a shelf already, right? And I feel great about this stock because if there's a recession, it does phenomenal. If there's inflation, it does phenomenal. If there's a good economy, it does phenomenal. It doesn't matter. Like, there's very few stocks in the stock market you can say, if there's a recession, high inflation, good economy, bad economy, that like they would be great in all those environments. Elf's one of the very few stocks, and it doesn't matter the economy. It does well no matter what. And as they've proven out, right? They've done well in a recession, they've done well in inflation, and they've done well in a good economy. So the conclusion I came to is I don't own enough. The bottom line is I don't own enough Elf Beauty. And so what I went ahead today and did, especially given the fact that this stock wasn't up 20% plus like it should have been, I went ahead and bought another $20,000 of Elf Beauty here today. I bought that in my Ally account, and I said, I think Elf's going to be a money printer into year end. I think it's going to be a money printer for years to come in the future. And so it's hard to buy a stock when you are up 1,200% plus on that stock. But at the end of the day, it's all irrelevant. All that matters is Elf a money printer over this coming years? Am I buying an undervalued stock? And the bottom line is it's very undervalued, extremely undervalued. And I think the stock's going to be a huge money printer. And so as tough as it is to buy a stock when you're up that much on it, I had to go out and do it. And I went ahead and bought another $20,000 worth. And it's a stock I can hold regardless of what happens in the stock market, regardless of what happens in the economy. It's all irrelevant. This company is one of the very few that they tear it up regardless, okay? And you can't say that for many companies, all right? No, you're definitely going to want to join me in the Patreon. That's going to be pinned comment down there, so you can basically see the moves I'm making in the market, exactly how I build out a portfolio. I also have a tier also that has a Becoming Master of Stock Market course inside of it. So you might want to check out that one as well if you're more into my courses. And then also if you want access to all my courses overall, plus be part of the 6-figure, 7-figure Discord chat in my private group and everything like that, then check out the second pinned comment. You can apply there and we can see if we can get you in there either this weekend or maybe next week at some point in time. Much love and have a great day.